It seems that investors cleared up sentiment on the US dollar by Wednesday. Market participants dispel fears as tensions between Russia and Ukraine cool down, and there is a strong likelihood that the Fed Reserve would resort to aggressive monetary tightening. Now traders are shifting focus back towards the economic calendar. What particular macroeconomic data will serve as market catalyst in the two last days of the trading week? Let's discuss it in the video calendar on InstaForex TV channel. During the Asia-Pacific session on February 17, Australia is due to report on its labor market conditions. The jobless rate is expected to remain flat at 4.2%, the lowest level since August 2008. On the flip side, unemployment change could be zero in January. Analysts predict a zero growth in the number of employed people in the first months of the year. Some experts warn about contraction in employment. Such disparate data is likely to assure traders to sell the Australian dollar. The currency market will see the most robust trading during the North American session. The market boost will be triggered by a report on the US construction sector. Importantly, the construction industry contributes significantly to a revival in the service sector, including a transport network, consumption activity, and financial services. Building permits to the US are projected to drop 4% in January. At first glance, this contraction seems alarming. However, the indicator logged the strongest growth in December since May 2006. In this context, a 4% decrease is a minor and logical correction that comes as no surprise, bearing in mind the future construction boom. Analysts foresee a similar dynamic for the US housing starts in January. Nevertheless, the data on the construction sector is of a secondary importance because traders will give priority to a weekly update on unemployment claims. Weekly updates from the US Labor Department reveal a positive trend. Such reports log fewer numbers of jobless Americans week by week, despite high daily rates of new virus cases in the country. The information about steady improvement in the labor market summons expectations that the Fed Reserve will raise interest rates in the near future. Thus, the US dollar will assert strength across the board. On Friday, traders will be able to check whether Japan is progressing in the fight against deflation. The authorities have been struggling to revive inflation for more than 2 decades. Even the global coronavirus crisis and soaring inflation worldwide didn't spur any rise in consumer prices in Japan. An annual rate still undershoots the target level of 2%. The S&P is expected to decline to 0.6% in January. This is bearish for the Japanese yen. Traders are anticipating data on consumer activity in the UK that is due during the European session. Analysts reckon that retail sales could have expanded by 1% to an annual 3.2% in January. It will be welcome news indeed. Consumers are still keen to spend money shopping despite persistent high inflation and 2 rounds of monetary tightening. The pound sterling will gain ground in response. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.